Before we jump into this episode, I want to invite you to join our community to help you become a better steward, scale to billions, and ultimately give more or all of it away. All I want you to do is to click the subscribe button right now. I love your support. It's incredible to see your comments, and we're just getting started. I can't wait to go on this journey with you. Thank you so much for subscribing. It means the world to me. Welcome to the Build It to Billions podcast, where we guide successful entrepreneurs and investors on the journey from millions to billions. We believe the key to scaling and compounding your wealth in life starts every single day with the mindset and practice of stewardship over ownership and applying billionaire biblical principles. Each and every guest we have on the show is an entrepreneur, millionaire, and billionaire, and they share their insights and wisdom with us. I'm Brett Swartz, and I'm excited to be a host today and grateful for the opportunity to bring on our next guest. He's the founder and managing partner of Peak 15 Capital, a private equity firm specializing in equity and debt across various commercial real estate classes with a keen focus on high alpha returns. Through deploying capital from in-house discretionary funds, Peak 15 Capital partners with developers, sponsors, and operators on entire asset types in geographical locations, and so much more. Please welcome to the show with me, Mr. John Azar. John, how are we doing?
Thanks, man. I appreciate it, Brett. Thanks for having me on the show.
Great.
It almost sounded like you could probably do a double for like that non-disclosure statements that usually ads have at the end of it. You can definitely do a double on one of those things. So.
I'm looking forward to that, man. I'm looking for another side hustle here. For our listeners, get to know you for the first time. Would you give us just a little more about your story and your current focus?
We're a private equity fund. We're based in Charlotte, North Carolina, but we're national coverage. We have offices in LA and New York, and we focus on providing liquidity to sponsors, operators, developers across a wide spectrum of commercial real estate asset types. We are asset type agnostic to a large part. We have few assets that we are completely not touching, but for the most part, we are multifamily, industrial, self-storage, built to rent communities, built to sell communities, that type of focus. Our focus is really sort of the returns and the viability of the deal and the people behind the deal. And I want to emphasize the people part because that's a huge part of our. That goes even above and beyond our underwriting is the people have to be right in every single deal, not the deal itself. So.
Excellent. And today we're going to be talking with John about the 3 red flags that you want to be aware of when any kind of commercial real estate deal. Let's dive right into it, John. John, what's the number 1 red flag when it comes to investing into commercial real estate with a sponsor, operator, or fund?
Well, these are things that you've got to watch out for sure. I mean, you have to it's the experience of the operator, of the sponsor. I mean, that is the very, very first thing that could either be a red flag or could be a green light. It just depends on how you're looking at it. But the experience is hugely important, and the experience is not necessarily on just how to execute that particular deal, but it's how to manage it and usher it, and as you said so aptly earlier, steward it into fruition and into a profitability at the end of it. And these are 2 separate things. Buying and acquiring a deal, because people mistake buying and acquiring a deal is the same thing as operating it and seeing it to its full fruition. That is not the same thing. A lot of people can buy deals, but not a lot of people can actually stick there and operate it and see it through until it's kind of the end cycle, which is, kind of cycles out of their portfolio. So you have to have that experience. That is the first red flag. If they have not done that type of deal in that type of market, that's our first red flag that we generally talk about. So the experience is huge. The experience can create, like I said, either a red flag or a green light.
Right. To that point, before we go to number 2, I can agree with you more. I mean, that's so key because this marketplace has seen those who we call the Warren Buffett skinny dipping, right? The tide has come out, interest rates have jumped. Gosh, I mean, it's tough, and I have some compassion for them because we got caught on a couple things, smaller positions for some of our clients and passive deals. So if you like this little short clip of the interview I just did, click over here to watch the full interview. And please don't forget to subscribe. Thanks so much, everybody.